Greetings, everyone. We are so pleased that you all could join us today. I am your co-host and co-founder, Trish N. Albrecht, co-founder of GPA Trading Services. And for those of you that have not had an opportunity to visit our website and check us out, we welcome you to do so at gpatrading.com. Now, today's topic is Friday market review, right? And what we're going to do today, before I turn it on over to Gary and he's going to walk you through, what we'd like to do is, before we jump into the live markets and see what's going on and get into all the action, we're going to walk you through briefly our trading strategies and our software, so you see how we analyze and utilize our software and our strategies to trade the market. Okay? And then if you have any questions, feel free to type those in and I'll address those. And also Gary will, at the end of the presentation, Gary can address those as well. Alright? So we have a lot to cover. We always do. And Gary's very passionate. Hey Carol, good to see you. Glad you could join us. Gary's very passionate about what he does, and he's very much into the education aspect of it. And so he will cover a lot of information for you today. And we're also going to record this and send that out so you can review it later as well. Okay? But again, we're very, very pleased you could join us on this Friday. We hope everyone's in a great mood and excited to join us. And those of you that have never joined us before, we're thrilled you're here. And those that have been with us before, welcome back. Always good to see those people. Okay? So now, if everybody's ready, I'd like to say please sit back, relax, and enjoy. And I'll turn it on over to Gary and we'll jump right in. Thank you so much.
Greetings, everyone. My name is Gary R. Albrecht. I'm the founder and CEO of GPA Trading Services. I'm the mastermind behind the Market Price Anticipator Premium Edition 3 software, and I'm also the educator and instructor. A brief bio. I've been a professional trader for 20 plus years. I'm considered a technical analysis expert. I'm a creator of a one-of-a-kind custom trading software. I'm the founder of GPA Trading Services over 8 years ago. We've been educating thousands of students around the world. We conducted numerous live events, speaking engagements, and platinum program. We also offer one-on-one coaching and mentorships. Today's topic, as you well know, is Friday's market review utilizing the Market Price Anticipator Premium Edition 3 custom software. A brief disclaimer. I'd like to point out a couple important areas. Trading is not suitable for all people. Some markets are leveraged, and therefore it is possible to lose money deposited for a position. A person should only use funds they can afford to lose, and that fits within their overall financial plan as developed by a qualified financial planner. Part of these rules are ours, where we say never risk more than 2% of your entire account balance on any one given trade. For options traders, you should never risk more than 5% of your entire account balance on any one given options trade. And most importantly, you should always adhere to strict and proper money management. Finally, all information in this presentation is for your educational purposes and should not be taken as investment advice, nor as a recommendation or endorsement to buy or sell any specific investment. Basically, you're trading at your own risk. Now, a couple of key components when anticipating future market conditions. You need to be aware of support and resistance, the direction of the trend. Utilizing multiple time frames is key, and the key is to align those time frames. And this is where we're unique. And we also will assist with understanding how the lower time frames cycle within the larger time frames, and you'll hear me refer to that as the line of progression. Now, what exactly do we mean about aligning the time frames? You'll notice in these three examples, we have the monthly. This is on gold, and this is where the monthly, we have a couple indicators, the price action indicator and the trend momentum. Now, some of you may have had experience with us. Well, this software is totally different, and I'll explain why. The time frames are the same indicators, but now when the time frame's aligned, so all you're looking basically to do with the software is you want to align both the trend momentum and the PAI either overbought territory together, or you want to align them where they both oversold. That's all we're looking to do, is align the PAI and the trend momentum oversold together to buy, and you want to align them when they're overbought for a sell. Now, as we finish this little display, we can see that the daily is expected to follow a very specific path and pattern. And that is because the monthly gave us what we call a hook and a cross pattern. This is where the PAI turns and hooks, and then you follow through with the trend continuation move, where the trend momentum then crosses. What do we mean by the cross? It's where the green line crosses below the red. So when we reference a hook, it's for the PAI, and when we reference the cross, it's for the trend momentum. And this is the strategy we call the hook and cross pattern. Notice what the expected behavior is. The daily, once it lines up with the monthly and the weekly, and they're both moving down, the daily is going to exhibit very specific behavior we like to call the slingshot phenomenon. That's where price starts to slingshot lower and lower and lower and lower and lower as the weekly cycles from overbought toward oversold, and as the monthly continues to depressurize from overbought toward oversold. This pattern is repeated on all time frames, but in this example we set it up on the higher time frames. So as we continue, this behavior is where the daily is expected to depressurize. So you ask yourself, when price starts to stair step like this, why is that? Price always moves in a stair-stepping fashion. Others have called this market ebb and flow, the ebb and flow of the market. Well, I don't care if you're in the strongest of a downtrend like we're exhibiting in this example, or you're in the strongest of an uptrend, price is always going to stair step. And the easy way to remember why is because it's about the time frame. The time frames are always moving with, against, with, against, with, against. So in the case of a downtrend, we had the lower time frames moving with the higher time frames when it was engaging lower. Then it went against the time frames when it started to depressurize. Then it reversed and went with the higher time frames, against the higher time frames, with the higher time frame. Therefore, it's causing this stair-stepping action, and we like to call it, in this case, not only is the price action stair-stepping, but we refer to that as slingshotting over and over, and this repetitive behavior is easily understood because you're following the direction of the higher time frames. Now, what do we mean by when we align the time frames? We just mentioned, what is that? That's where you get the price action indicator overbought, combined with the price action indicator and the trend momentums combined in overbought territory, you look to sell. When the price action indicator and the trend momentums are oversold, you look to buy. And then you follow the line of progression. So here's what the line of progression looks like. And this is an example where we're slingshotting lower and lower a couple of more times I mentioned. Well, I'm going to show you the same thing now with the line of progression. Here is oil, and we have the monthly overbought, clearly deeply overbought, turning over. We had a monthly not only overbought, but the weekly, as you can see, already was overbought, starting to turn down. And then the daily was overbought, starting to move lower as well. And notice in this example, we have triggers that will give you a visual picture right here. It triggered short for us to go short when our trend momentum and PAI was overbought. And we're expecting price to go lower because not only was the monthly overbought, the weekly was overbought, the daily was overbought. So this is a trade set up by a trigger and the hook and cross pattern. You can see where the PAI started to hook, and then the trend momentum follow through, then crossed. And why is that important? The hook and cross pattern is magical. And this is different than ever before because the software has been recalculated to match the hook and cross pattern across all time frames. So what does that mean? When I see a weekly hook and a weekly cross, that's a magical event because it means the daily is going to move all the way from overbought all the way to oversold. And because the weekly was still moving lower week after week after week after week, as it cycled down, the daily must exhibit that following the line of progression behavior. And what was that? That stair-stepping we mentioned, how price always stair-steps lower. Or you've heard the term, in a case of a downtrend, you want to sell the rally. You get a rally and you sell it. You get a rally and you sell it. You get a rally and you sell it. How do we know we're in a downtrend? Because the weekly and the monthly PAI and trend momentums are down. So that's why we know we're in a downtrend. And why we keep selling the rally, that's the slingshot. So as soon as it goes up and hooks back, you sell it. It goes up, it hooks back, you sell it. It goes up, you hooks back, you sell it. So that's what we mean by sell the rally in a downtrend, aka you're going to sell the slingshots once they form and then engage. And I'm just going to go through showing how this repeats itself. So in this example, the monthly was overbought, the weekly was overbought, and the daily was overbought. And as it started to persist, we went through that process of slingshotting lower and lower and lower. As I illustrated here, this process continually repeats itself. And how often and how many times would a daily keep slingshotting lower? As long as the weekly remains down. And then you could say the same for a weekly. What about if I have a monthly going down and I keep selling weekly slingshots? You would keep selling it as long as the trend momentum and the PAI are down. That's simple. All right, here's another example of following the line of progression with a currency pair. In this example, you can see where the pound dollar was lining up with the monthly oversold, the weekly oversold, the daily oversold, and the 4-hour was oversold. And I'm going to go over the process of following the line of progression, because as the daily first hooked, what do we mean by the hook? Again, it's the PAI that turns and hooks. This is the PAI hook. When that first turned and hooked, and then we see the cross. Hook, cross strategy means as soon as this hooks, it wouldn't hook unless the 4-hour was oversold, already hooked up, and already crossed up. And as it continues, as it hooks and crosses, then it means the 4-hour is not only going to go from oversold, it's going to go all the way and make the cycle to overbought. So what about the weekly? Think about it, it works in all time frame. So when a weekly starts to hook, this hook would never have occurred unless the daily had already hooked and already crossed. So the daily would have never hooked unless the 4-hour had already hooked and already crossed. The monthly, as the monthly shows here, it just started to hook, and this little hook pattern here on the PAI, the hook, would never have occurred unless the weekly had already hooked and crossed. So remember that. When the one time frame shows a hook, it means the lower time frame is already hooked and crossed. That is your entries based on the hooks. So when I see a daily hook, I know that when I enter that trade, I know the 4-hour is already hooked and crossed. And as the daily shows not only the hook, but the cross as well, that means the 4-hour is going to cycle all the way to overbought. So watch the weekly. When this hooked and crossed, what did the daily do? The daily went from oversold in days and days and days and days and days and days. It kept going higher, and it cycled all the way to overbought. And what you don't see here in this picture is as this continued to hook and cross, this weekly went on for weeks and weeks and weeks and weeks higher, and the trend momentums kept going higher for weeks. So please remember that. I'm going to refer to it over and over. Hook and cross pattern equals the next lower time frame making the complete cycle up. A hook down would mean that the lower time frame had hooked and crossed, but as this time frame hooks and crosses down, then the lower time frame is going to go from overbought all the way to oversold, overbought all the way to oversold. So it works in both directions. And as we can see, that slingshot phenomenon does continue, because as the daily is finishing the upcycle, the only way the daily can go from oversold day after day after day after day after day into overbought territory, the 4-hour has to exhibit that very specific behavior, and that is once it cycles to overbought, it's going to turn over and slingshot higher. It's going to turn over and slingshot higher. It's going to turn over and slingshot higher. And this slingshot phenomenon continues up and until the daily cycle finishes. Then as the weekly continues, the daily should turn over and start slingshotting higher so the weekly can finish the cycle. So that is repetitive, and it does work on all time frames. It's that simple. Now, let's go to the charts to show you what it looks like in real time. And any futures traders out there, if you trade futures, type in yes. All right, well, we're going to start off with coffee. Coffee is setting up for a big move to the upside. Coffee is setting up for a big move to the upside. Why? The monthly is deeply oversold, both the PAI and trend momentum 1 and 2. Trend momentum 1 is the red and the green and red here, and trend momentum 2 is the aqua and yellow. Both are oversold. PAI is oversold on a monthly. Why is coffee ready to start bouncing? Because all time frames are in oversold territory. Notice the weekly. The weekly has already started to hook and cross. That's why it started initially, then it slingshotted lower one more time. Well, this process of slingshotting lower is about to end because the monthly is about to hook. And when the monthly hooks, we're going to see the what? Hook and cross pattern back up on the weekly. Notice the last time we started to hook here, we didn't get the cross. It was flat. We do not see green above the red as we see in this previous example where it hooked up. So we did get the hook, but we didn't get the follow through of the cross, but yet we still made some nice profits. And we were told in class as we went through this process, be sure to buy the hook, but then sell the slingshot if you don't see the crossover follow through. So what does that mean? That means if it hooks and you enter, and then later you don't see the cross follow through, then expect it's going to slingshot back down, and you'll look to sell it after that. So why is coffee setting up for a big move? Again, the monthly's oversold, the weekly's oversold, and the daily has a hook and cross pattern. Everyone see the PAI hook, and now we see the trend momentum cross. We see green above the red. We don't have a huge angle in separation yet, but it's still a hook and cross pattern. So if you were listening earlier, what can we gain from this idea the daily has hooked and crossed? What does that mean? Well, check out the 4 hour. It means the 4 hour is going to go from oversold all the way to overbought territory. So watch what the 4 hour did. It went from oversold all the way to overbought, and it's still not quite finished. So those of you in coffee, yes, it's moving up. Part of a little correction here, a little sideways movement, and the next direction is to finish the up cycle in the coming days. As my daily continues to push higher, the 4 hour will finish that up cycle, so we can look for coffee to keep stair-stepping higher. Everybody good? So what's next? Once the 4 hour finishes this cycle, the daily already has a hook and cross pattern up. See it? We got a steep slope, and we have beginning of a cross. And as this continues, as we go into Sunday's open, Monday, depending on where you're in the world, markets reopen, we get a new daily candle. How do we know we're on the daily time frame? This little trader's companion tells you what market asset, in this case coffee, what time frame, the daily, what the current price is, and how many minutes is left in that daily candle, and if it's up or down for the day. This is part of the little trader's companion. So what is this? This daily hooked and cross means the 4 hour will finish the up cycle. So we know that this is going to continue to stair step higher so that the 4 hour can finish the cycle. Well, look at the weekly. As we move into next week, we're also going to get a new weekly candle, and we can see we're getting a big rejection wick here, and we're likely to see the new weekly candle start off, and if we see the hook pattern develop, then we know it's a trend continuation move. And as I go through the next few days and into next week, I'm going to watch to see if this hooks and if it ultimately crosses. If this ends up hooking and crossing, then you can rest assured coffee is going to continue to climb higher for days and days and days. Why days and days and days? Because once the weekly hooks and crosses, the daily finishes the cycle. The daily finishes the cycle. And that would give us days and days and days of upside. Well, based on a monthly oversold, a weekly oversold, a daily oversold, we're due for a bounce. Even if it goes up to maybe slingshot lower and goes down later once the cycle's finished and then reverse, at least you're in a long trade for several days to not weeks. And this could end up lasting for months, because all you need behind that with this monthly that's so deeply oversold is all you need the monthly to do is hook and cross. Once the monthly hooks and crosses, what does that give us? That means this weekly that hasn't even turned and hooked and crossed yet will eventually go weeks and weeks and weeks and weeks and weeks and weeks and weeks to overbought, and the trend momentums will go weeks and weeks and weeks and weeks and weeks to overbought. Okay, so that's just one of them. Here's another example of a trade that we're currently entered in from our live classes, and here's several you may want to keep your eyes on. The New Zealand yen. You should be long the New Zealand yen for currency traders. Why? Why do we know this daily was going to finish this cycle? It was absolutely going to go up day after day after day after day after day. Now, admittedly, that every day the daily continues to move, it's possible you could have a red candle for that day. Why? Anybody want to guess why we had a red candle even though the daily stayed up the whole time? It's all about the cycling time frame. So in order for the daily to give us a down candle for the day, obviously my foreman and workforce, that's the 4 hour, and the workforce is considered the 1 hour, the 30, and the 15. I love the foreman, the 4 hour, because it's the gatekeeper between the lower time frames and the higher time frame. And it organizes like a foreman on a job site. So does the workforce. Once the foreman gets the idea, so this is what we need to do, the workforce is the one that pushes the work. Intraday charts, etc., is the one, the workforce pushing higher, while my daily was projected to what? Continue to enter. Now this trade was entered late. This is an example where we entered later due to a stair step, and then we entered our trade, and notice we booked 52 pips of profit. It moved automatically the stop loss from at risk into profit, and now this is an absolute no losing trade. Cannot lose. It's already bank profits, and now the stop loss is located in profit, so even if it reversed, you would get pipped out for more profit. Well, the reason I haven't closed this is because the reasons mentioned above. We have a weekly hook and a cross pattern. See the hook? See the cross? Green above red, PAI hook, trend momentum cross. That's telling me this New Zealand yen pair still has more upside to go, and the daily is going to finish that upcycle minimum, and it may even, once it turns over, start slingshotting higher and higher. Why would it do that? It depends on this weekly. So this is when the weekly, as it continues to depressurize, well, is it going to go up and slingshot lower, or is the weekly going to start moving towards overbought? This is why the New Zealand yen is in a good position as well, because the monthly is located in oversold territory as well. It's not as deep as it possibly could go, but it's already oversold. So this is why we got in the trade, because the weekly hooked, and we knew the daily and crossed, and we knew the daily would go up for several days. And again, this is not over, so keep buying the dips in the uptrend. What is the uptrend? Now remember this. Not only when a weekly hooks and crosses did the daily finish the cycle, but while the daily's in the process of going day after day after day after day after day after day after day, we know what type of behavior to expect from a 4 hour. The 4 hour is going to move, as we've been mentioning, from oversold from that bottom swing point, and start to move towards overbought. And along the way, if it tries to engage against you, expect it to fail. Why? Because the daily has a hook and a cross, which means this 4 hour is going to run the full cycle. And these are entries. When it hooks and crosses back up, re-enter. Engages down, disengages, re-enter. And then the 4 hour did exactly what the daily said it was going to do. It's going to go to overbought, and then when it gets there, it should slingshot higher and higher and higher and higher and higher, and continue to repeat that behavior until the daily finishes that cycle. So let me slice this up for you. In order for a daily, and this works on all time frames, ladies and gentlemen. So if you're a scalper, you can do this with the 5 minute. And if I get a 5 minute hook, that means the 1 minute's hooked and crossed. If the 5 minute shows a hook and a cross pattern, then the 1 minute's going to finish the upcycle. I get a 15 that hooks and crosses, then the 5 minutes going to finish the upcycle. A 30 minute hooks and crosses, the 15 finishes the cycle. A 1 hour hooks and crosses, the 30 finishes the cycle. A 4 hour hooks and crosses, the 1 hour finishes the cycle. A 4 hour hooks, daily hooks and crosses, then the 4 hour finishes the cycle. Weekly hooks and crosses, the daily finishes the cycle. Monthly hooks and crosses, weekly finishes the cycle. So again, it does work on every time frame. But notice as the daily was starting to hook, and we knew based on that weekly hook and cross pattern, the daily was expected to at least finish the upcycle. And right now you can see it's still not finished, nor is it finished here. So what behavior can we expect the daily to do? Reverse and start moving towards overbought, but watch the line of progression. The 4 hour is so smart. It knows by the time the daily hooked, the 4 hour had already hooked and crossed. And because the daily hooked and crossed, the 4 hour would finish the upcycle. Even if it starts to engage against you, that's a blessing. When you go, well, I thought this was going to go higher and it's starting to pull back. Expect these to fail. And when they do, you re-enter on the cross. And when it comes down, you re-enter on the cross. And then when it turns over, you buy the slingshot. It turns over, you buy the slingshot. So you buy the dip in the uptrend. In this case, as we showed you earlier, we were showing you how to sell the rally in a downtrend. And this works on any market symbol, stocks, futures, commodity, ETFs, bonds, currencies, cryptos, anything you want to trade, it'll work the same. Once you get a hook and a cross pattern, the lower time frame cycles. And it is the highest of high probability. It's a given. So why is that important when we're trading? Because it doesn't matter what you're trading, the same. US Tech 100, why is it starting to go back up? We're starting to see a weekly hook and a weekly cross. So that meant this daily was going to finish this. Well, that is a daily, sorry. This is the daily. That's why you use your little Trader's Companion. This is the daily, and the daily is currently hooked up. And we're crossing up. You can see green above the red. So this is a daily hook and a daily cross. So what do we know about the 4 hour? And could we have scalped this the last day over on this? Absolutely, because we knew the 4 hour was going to move from oversold all the way to overbought. It was going to move from oversold all the way to overbought. And what did NASDAQ do? Went up significantly. And notice how the software is so in tune with price action. It's going up, and then price didn't start moving lower until the indicator turned. And then price didn't reverse and start going up till the indicator turned back. But this behavior of a 4 hour engaging, disengaging was expected. Why? Because at the time, the 4 hour was designated to finish the upcycle, and when it started to turn here, you can see we weren't finished the upcycle. We were not finished, so this is why price made a higher low than a higher high. Well, what's next? The daily's still up. I'm looking to buy NASDAQ when this 4 hour turns and engages up. When it turns and engages up. So when is that? That's going to be when this 1 hour finishes the down cycle. So scalpers, Tom, if I wanted to scalp the NASDAQ in this case and say, okay, I'm going to look for it to bounce off of Ichimoku cloud here, and I know the 4 hour is likely to slingshot back up because my daily is up, and currently my weekly is turning down, but the daily cycles first. So while the weekly's in this position, we expect the daily will finish this cycle. Then when it finishes the cycle, it's going to turn back over. Right. So when's this likely to force the 4 hour to engage up? Intraday for scalpers, I would buy this once the 1 hour finished its down cycle. Why finish the down cycle? So does that mean this could be scalped further down? Yes. And why? Why could we scalp this further down right now? Anybody want to guess? We have a hook. We have a cross. Look how easy this is, Tony. We have a hook. We have a cross. So what does that tell us? A 4 hour PAI hook and a 4 hour trend momentum cross, 4 hour hook and cross equals 1 hour going from overbought all the way to oversold. Overbought all the way to oversold. So this is telling me that US Tech, NASDAQ in this case, has not finished its down cycle. But once it does, I'm interested in buying the 1 hour hook back up so I can scalp it back up. I trade both. I'm a investment trader, so I tend to set up the monthly, weekly, and daily time frames. And while they're cycling, I'm in these trades for days, weeks, and months at a time. But that's what I was pointing out. If you're interested in just scalping, where you want to just be in for a day or maybe less than that, or even intraday, and you want to get in, you would use the lower time frame. So all I would need to do, whether I'm trading the NASDAQ or gold, silver, stocks, futures, commodity, ETFs, bonds, any symbol, is once I see the 4-hour hook and cross, I can short that, because once it hooks, the beginning of the 4-hour hook, that already tells me it would not hook. Let me show you this closely. See how it was flat for a while? And it didn't finally hook until when? This will never hook. The software set up that way and programmed deliberately that way. This would not hook unless the 1 hour had already hooked and crossed. Right? So when the 4-hour finally hooked on that time frame I showed you a moment ago, we already had a hook and cross pattern on the 1 hour. So that's why we can short as soon as I see a 4-hour barely start hooking. Now, admittedly, this is by design that this hooks first before you get the trend momentum follow through. Notice the green didn't cross below the red until about a candle or two later. After we hooked here, we were up here and we were in the process of still turning over as we were hooking, but then it took another 4-hour or maybe a second 4-hour candle by the time this crossed. But this is why when I buy, and in this case I sell the 4-hour hook, it's automatically telling me this is a good time to short because I already have a hook and a cross pattern already on, this case, the 1 hour. So the 1 hour is already moving down when the 4-hour started to hook. And why would we stay in this trade? Because it was a trade continuation. The 4-hour not only hooked, but it followed through by the cross. And this is what I mean by trend continuation, that once the hook and the cross develop, then we knew the 1 hour was absolutely destined to cycle all the way to oversold. Even if it tried to slingshot back against us, it would fail, and it did rally and it did fail. You ended up, what's a failed slingshot? Another word for a failed slingshot? A price pattern reversal. We had a high, we had a low, we had a lower high. And even as the daily had hooked and crossed, we knew the 4-hour was going to, in this case, the 1 hour, because the 4-hour hooked and crossed, this 1 hour would finish the down cycle. So when it started going in the wrong direction, engaging up, I start salivating, going, great, go all the way back to the top. That'll be good, because you're expected to fail, and as soon as you do turn and hook back out and fail, I'm going to short you, because now I know you're going to end up with the price pattern reversal, high, low, lower, high, lower, low, and it would finish the down cycle. I said this days in advance when we were talking about still riding this higher. I said, look to sell that 4-hour hook, because it's going to end up hooking and crossing, because it needs, at worst case scenario, depressurize so it could slingshot higher, if not a reversal, and start moving much lower. So we said this, and you can listen to the archives, and it says, hey, sell the NASDAQ when the 4-hour hooks. And I said that hours and hours, even a day in advance. When that 4-hour finally gets up there and hooks, sell it. And then take aggressive profits. So this example, this is not finished. It can still bounce up and down. Why did this turn against us? Why did the 4-hour start to think about engaging up and then fail? Well, in order for the 1 hour to finish that cycle, it can't slingshot up and turn back up, because if it did that, then my trend momentums would have never finished the cycle, and nor have they finished the cycle yet. That's why we know NASDAQ still has some more up, down, pogo stick, sideways to lower movement, and until this 1 hour finishes the down cycle, I'm not interested in doing anything but letting my winning trade to the downside continue to play out. When would I go long? I wouldn't go long until this actually finishes the down cycle, then turns and hooks, and then you enter upon that hook, because it's going to bounce off the Ichimoku cloud, and then my 1 hour is going to start to depressurize. It doesn't mean it has to go all the way to overbought. It just means if the 4 hour is going to stay down, then my 1 hour is still going to turn and go up, which I could scalp and make profit on. And worst case scenario, it's going to turn and go up, and then slingshot back down, but I still would have hours to make profit and even close that trade and even sell the slingshot back down. How do I know it's going to slingshot lower on the 4-hour, or is it going to reverse and make the 4-hour turn back up? That's why during the process of it bottoming, when I buy the 1-hour hook and I'm watching and I'm in a trade for an hour or two, I'm going to watch to see if the 4-hour starts to flatten out. Does it change angle? Does it still stay down? And if this 4-hour stays in this position as the 1-hour is depressurizing and it doesn't react, then I know the 1-hour is going to bounce and then likely slingshot lower. As opposed to the 1-hour hooks and crosses, and the 4-hour does start to show as it starts bouncing, starts changing angle and starts to form that slingshot, where it's separating and then it starts to flatten out. And then yes, if that's the case, when I see the 1-hour hook and cross and the 4-hour is reacting by flattening out, then there's a high probability the 1-hour is going to finish the up cycle and the 4-hour will engage. So that's how I know I don't need to worry about it when I first enter this trade and say, well, is my ultimate goal to look for this trade to break a new high right now, or is it just to scale into a position and, scalp it? Well, guess what else the hook and cross pattern does? Anybody ever use Fibonacci's? If you don't, you're making a huge mistake. Fibonacci's are awesome, literally. So once the 1-hour finishes the down cycle, right now my swing point high represents the last time this 1-hour was overbought, right there. And right now we don't have a swing point low right now because the 1-hour has not finished its cycle. But once it does finish the cycle and hooks, then we can use the Fibo retracement for a potential target. So let's say we do come down to the cloud area, and at the time in which this 1-hour finishes the down cycle, we're around 75.30. As an example, we drop 20 more points. And this finishes the down cycle, and I'm watching NASDAQ and it's sitting at 75.30. And I see my 1-hour totally oversold, and I don't enter because it's oversold. You don't enter because it's oversold. You enter because it hooked. Everybody clear? You don't enter and say, well, it's oversold, I'm going to enter now. You do it because it hooks. So once the 1-hour hooks, what does that tell me? That means on the 30-minute time frame, the 30 minutes already hooked and crossed. And by hooking here, I can use that as a bounce. And what's the magic of the Fibo relationship with the software programming? That once I get a hook and cross pattern on a time frame, the probability it's at least going to go into a sweet spot location of a retracement is exceptionally high probability. What's the sweet spot? It's a 38.2, a 50%, and a 61.8. So when I go and I buy the 1-hour hook, when do I know it's hooked? When it finishes the down cycle, and then I see the PAI, which is this indicator, comes down together and it turns and hooks like over here. It's going to come down, it's going to hook. When I see that, I run the Fibo from the swing high to swing low. And how do I know I have a new swing low? Once it hooks, we have a swing low. Not when it's down and still finishing the cycle or an engage, disengage scenario. That's not finishing the cycle. Once it physically finishes the down cycle, then it hooks. Then I run my Fibo from this high to whatever the low is, and I target this 75.61. Well, what if we don't go quite to 75.30? Well, again, once this finishes the cycle and I get the hook, then I can bring my Fibo to wherever it is. In this example, it's right here now. But why is this not the Fibo we're looking to buy from? Because it's not over yet. Right? We know the 4-hour hook and across means this will finish the down cycle. Once it's finished, it turns and hooks, and then you enter the trade. Well, Tom, Tony, what if I told you this trade management system you see in the background right there, you can tell it to say, hey, I don't care if it takes another day or several hours. In this example, it wouldn't be days because it's an hourly time frame. But even if I was on a daily, I could tell this trade management system, I could set it and get it ready to trade, ready to pounce. And as soon as the 1-hour came down and hooked, it would enter the trade automatically for you. How about that? Now, does that interest you? So I don't have to sit here and watch the NASDAQ go down for a few more hours and watch the indicators go down for a few more hours. I can tell the trade management system, hey, buy that 1-hour hook once it's finished. Boom. And then I could start focusing on my target once the swing point is intact. And I'm going to continue to show this across multiple platforms. The pound yen has been a great trade. We've been in this one. It's pulling back right now, but the pound yen, we're up 584 pips. We've been scaling in this ultimately over and over and over. Why should you look at the pound yen? I don't care if you're an options trader and never trade Forex in your life. You want to learn to trade Forex. It's the most liquid market in the world, and it's so easy to trade with the software, and it's all automated to boot. So why is this so important? It's going to go higher. We're up all of these hundreds and hundreds of pips because we got a weekly hook and a cross weeks ago. So what does a weekly hook mean? When it first started to hook before it later crossed, it first started to hook, what did that tell us? That my daily had already given us a hook and a cross pattern, a hook and a cross pattern. And we knew this was going to go in stair step higher and higher. Absolutely. Why? Because the weekly hooked and crossed, and it meant the daily would finish the upcycle. It would finish the upcycle. And I can repeat this over and over, a million examples. Well, why haven't I taken profits more? I think we're going to end up with a higher low and a higher high. And this daily is going to depressurize and slingshot up again. Why is it going to slingshot up again? Because I said so? Because I think so? Or because I know so? Well, I would say it's both number 1 and 3. It's because I said so, and it's because I know so. It's going to end up slingshotting because the weekly is up, and it has a very steep slope, and it has angle and separation. Anybody use moving averages, exponential moving averages on charts? You know how when you get a cross of a moving average, the steeper the slope and the more angle and separation, the stronger the trend? Well, that's exactly that. This is not your run-of-the-mill indicator. It is a proprietary indicator, and it's totally different for those of you that may have tried it years ago. Totally different now. It looks the same, but it's way different. Now, we don't do run-of-the-mill. We do the hook pattern, and why did I know we were going to get days of upside pressure? Because the hook and cross pattern, the daily finished the cycle. Well, why do I think and know the daily is going to end up turning over and we're going to end up with a higher low and a higher high? Look at the monthly. The monthly is turning. Well, Gary, it's down, but notice this indicator, it's turning back up. See it? And what did the pound yen in this case on the monthly do months ago? It went up, it slingshotted lower, failed, went up, slingshotted lower, failed, and this is the third time. Once, twice, and this is the third time it's going to fail, and we're going to end up going on to make new highs. Well, the pound yen is one you want to be in because the previous high represents up here. And when it engages down and then disengages, we have the highest probability price is going to continue to stair step back to the previous high and make a new high. Now watch, I'm going to show you that over and over, not just on this one currency, but any pair. We started to go up, we slingshotted lower and we failed. This little slingshot here and it turned back out. What did it do after it failed? Price goes back to the previous high and makes a new high. It engaged again, came down, it disengaged. What does price do? It goes back to the previous high and makes a new high. And notice it went on to make this high. Well, this is the last time it engaged down from. So now that it's turning the hook out, guess what? We're going to go back to this high and make a new high. Well, on a monthly time frame, look where this high is sitting. It's up at 156.60, 156.59.7, 156.597. Where are we now? We're at 147. Anybody do the math? You have another 900 pips to the upside, and all we need to finally confirm this is the last little blue line that's flat to start turning. And I say it's going to do it. I said it was going to turn and hook out months ago when it was going down. I didn't say go long because it's going to hook out. I said go long when it does hook. And we anticipated this. That's why we got back in and we're able to make these large moves. And by turning out, this means we should not go straight up. Well, Gary, does that mean I can buy the pound yen? It's just going to go up every second of every day of every week of every month. And I'm going to go from 0 to 900 plus pips without ever having any pullback. Of course not. The time frames are always going to cycle. What is this doing? It cycles with the higher, against the higher, with the higher, against the higher, with the higher, against the higher, with the higher. So we're in the process of stair-stepping higher. I did this over here when we were talking 2,000 plus pips. And this is just a scale back in because we're turning back out. And what? The weekly has already spoken. We have a huge slope angle separation. Steeper the slope, the better. The more angle and separation, the better. And we know the daily is going to finish the upcycle because we had a weekly hook and a cross. Well, the daily not only finished the upcycle, it slingshotted higher, and it's due to slingshot higher again. Well, when do I go long on this? Right now it's pulling back, so this is not the time to go long because the daily has to finish depressurizing so it can slingshot up again. So just like I showed you an example of NASDAQ, when's a good time to go long pound yen? When the 4-hour finishes the down cycle and turns back up. So I could set this trade management system, not in this exact trade on this platform because it's already running, but if I wanted to have this trade still run, and Gary, I wanted to get in on another one, what do? You open up another pound yen trade, and you'll notice I can set it on this one because it's a different setup. So I could tell this trade management system, okay, I want to buy the daily slingshot, or I could tell it, I want you to buy the 4-hour hook when it finishes bottoming out and then triggers higher. I want you to buy that. Likelihood we're going to come down and touch the cloud. That's what it tends to do. It cycles towards the cloud before it cycles up. It cycles toward the cloud before it cycles up. So this one is very likely to go down a little more and then bounce and go on and make new highs because why? The 4-hour is going to reverse and go back to overbought because my daily is depressurized and expected to slingshot higher. And it's expected to slingshot higher because the weekly has a hook and a cross, steep slope angle and separation. And behind the steep slope angle and separation, we have the monthly that is already turning out, which then tells us we're going, not only are we going to keep stair-stepping higher, but the highest probability we're going back to this 156.60, 156.597, basically rounded off. Bottom of the cloud, back up to 156.60, which is 940 pips. Okay? Or 920 pips to get to 40. Or 60. No, it is 940. Okay. So you get the point. This is clearly going to keep going higher. Well, why wouldn't I want to get in right now? Well, you can. This is what I teach in class. We teach you about proper stop loss placement.
This was a question. Gene said, what type of stop loss do you use?
Proper stop loss placement. Gene, it's up to you. It's up to you in the case. Well, when I started this trade entry off of this hook, I used the swing point low. When I first entered the trade, I used the hook because the hook means what? We have a swing point low, and then when it hooks, we have a swing point high. How about that? When it hooks, we have a swing point low. So in this example, it was kind of flat, and by the time it truly hooked, we were over here, but I don't use this swing point low. I use the swing point low of this overall move. Okay? But most of the time it will be when it hooks the swing point low you see. Sometimes it's like this and it'll turn and hook later, and truly the swing point low was here, but I always use the swing point low. So there are times I trade with a couple hundred pip stop loss. I mean, all traders trade with a few hundred pip stop loss that are professional traders, especially trading off a weekly time frame. Because what is this scenario? When I entered this trade, and again, we're already up. This is just the one running, and I'll go back to the weekly. We're already up over 500 plus pips, 580, and we started buying this after this latest little hook pattern. So when I got in, I had about a 150 to 200 pip stop loss, I believe, at the time when this occurred. And you're like, well, wow, that's kind of high. Is it really? A 200 pip stop loss for over in this case, back when we were 500 pips lower and we still have another 900 to go, is a 200 pip stop loss outrageous for a 1400 pip move? That's 7-to-1 ratio. That's an excellent risk to reward ratio. So your option is, well, what if I have a small account? Trade with micro lots or mini lots if you're worried about it. What I teach in class is if you're not willing to use the higher time frame cycle and you want a smaller stop loss, then this is where we could enter off the 4-hour. When the 4-hour finishes in hooks, we're going to get a new swing point low down here. And what I like to do with Ichimoku, if it's bouncing off the cloud and hooks up, I like to go below the cloud or at least in the cloud so I know it has a chance to move. Well, it's the same thing. My 4-hour is going to turn and hook, Gene, and what's going to happen? We're going to turn and hook, and again, this probably won't happen since it's this late on Friday. You're probably not going to see this until Sunday or even late into, London session, Sunday night going into Monday. Probably by the time this finished cycles and then turns up. But once it does, I can let the trade management system enter it automatically for me and just set an arbitrary stop loss. Or in this case, once it hooks, I'll have a swing point low, and I just must make sure I'm below the swing point low. So again, it may be 200 if you're trading off a higher time frame. On the lower time frame, it might be 50. It could be 60. It just depends. Well, what I do with my trade management system is it's on-screen programming. Look how cool the software is. Notice I'm at Breathe Easy +1. I have 578 pips of profit and 577 pips where the stop loss is. So that means if it reversed, I'd get pipped out for additional profit because it's in profit. Well, what happens if I want to move this up? All I got to do is click it till I see these little lines and drag it and say, okay, I don't believe we're going to reach the cloud. This would be foolish for me to push it that high up because I'm expecting it to go lower and bounce off, right? I'm expecting it to bounce and go off. So I don't want to necessarily move it all the way up there, but I certainly could move it down here below the cloud and give it more time. Now I've locked in over 300 pips. See, it's 570, it's 230. So that's 340 pips I just locked in profit. Now if it reverses, it's going to lock me in for another 300 pips. Notice where we took profit 1. I didn't even take profit 1 until I made 500 pips. Zoltan, do you have the patience to be in a trade and let it run up 10 pips, then down to 4, and up to 20, and down to 10, and up to 50, and down to 30, and up to 100, and down to 70, up to 200, down to 150, up to 300, down to this, as it stair steps? See what it was doing? It was with me. I'm making some profit. Oh, it's going against me. Oh, I'm winning. Yeah, it's going against me. Oh, it's with me. It's going against me. It's me. Going against me. So notice what it did. You can see the line across here. I was in during this period and it kept going with me and against me, then with me, and then against me, and then with me, and against me, and with me, and against. Why did I allow it to keep running? Because I knew, based on the weekly hook and cross, that I would be in this trade for weeks, and that the daily was expected to cycle all the way to overbought, and I didn't care that it would go up and down and up and down. I wanted to let it reach my first take profit, which was at right there 500 pips. How cool is that? So again, if you're worried about, well, if I trade the weekly and I use that swing points to be a few hundred pips, then allow it to turn and hook, and you use a stop loss, much smaller stop loss, off the 4-hour. And then once you start to build some momentum and you start getting up in the hundreds of pips, then you can move your stop loss back into deeper and deeper profit. Well, watch how smart the software is. What if I bring it way down here? I want to take a winning trade and turn it into a losing trade. Let me go back to my daily so you can see this better. All right. Now it's back to break even +1, remember? So what if I say, well, it's going to go, I still think it's going to bounce, and you should never do this. I'm going to take my trade I decided on, and I'm going to turn it from a no losing trade into a losing trade. Watch when it ticks. Watch what happens when it ticks. It needs to tick, but watch what happens. It's going to force this back into profit. It won't allow you. Look at that, how smart it is. Sergio, it will not allow you, once you take profit and turn it into a winning trade, it will not allow you to move your stop loss out of profit into negative territory, meaning you could turn a winning trade into a losing trade. That's how smart it is. It'll allow me to move it up and it'll stay, but it certainly will not allow me to move it lower. I'll close that. It certainly will not allow you to move it when you're at a winning trade into a losing trade. It just doesn't do that. How cool is that? It's got everything. So why is we expecting this to go a little more down? We got a daily, and if we get the daily hook and cross, you see it right there, it's crossing. We got a hook and a cross. That's why I'm not interested in buying this other than till the 4-hour finishes the down cycle, because the hook and cross on the daily means this is going to finish the cycle. And it's telling me be patient, be patient. And again, if that's not enough for you, it's automated, so I could set this trade management system to say, hey, don't do anything until you turn and hook back up and trigger higher. Then it'll stay in the ready to trade mode until it's ready, and it could go down 4, 8, 12 a day, whatever, until it finally reaches oversold and the trend momentums are oversold, and it hooks and it'll enter the trade automatically for you. And then, of course, you wouldn't use a several hundred pip stop loss. See where it is way down here? We have plenty of space to use that this should bounce off the cloud. So a great stop loss is right below this cloud. Well, Gary, what if I don't want to have that large a stop loss? Well, once it gets down here and it hooks, right? It comes down, and watch the cursor. It turns and hooks. Then I enter and I put my stop loss below the swing point low, which at that point is going to be much less than, say, 40, 50, maybe 60 pip stop loss. Depending on when we finally finish and hook, you'll get the stop loss down below your swing point low. So that's what you use. Well, you don't have to use a couple of hundred like I did on the weekly chart. I can wait for this to pull back, finish the cycle, and when it hooks back up, I enter again off the lower time frame using a smaller stop loss. Okay, let's keep going. Here's some other ones we pegged. How about anybody trade bonds? We have been just nailing bonds. Oh, it's like I can see the future. Well, it's not me seeing the future. It's the software reading and anticipating the future. And we said that this was going to keep stair-stepping lower for months, and we still got a long way to go. Those of you that are into Treasury, the destination is we're going to 126.31. We're absolutely no question going to reach this destination. Why? I'm going to give you several reasons why, and I'm going to show you why. This destination is a given. Okay. Why is that? Well, because this is what we call the ABCD pattern, right? A up, B down, C retracement, D extension. Gartley's, people call them different things, ABCD pattern. This is the A, the B, the C is over, and we're stair-stepping down in a D. And this is a high probability destination. And it's also going to reflect the previous swing point low at the 127, a little bit higher, 127-ish. So this is definitely where we're headed. How are we going to get there? We're going to stair-step there. Why stair-step? Because the time frames always cycle. And notice the behavior. The ABCD pattern's been in check. We started with this big reversal off the monthly, and then we slingshotted lower, and we slingshotted lower. So anyone want to guess as I paint the Picasso? We call this painting the MPA pe3 Picasso, where I go in and I said months ago when this was starting to go up, I said look for it to go to a retracement. Then when it turns back over, we're going to sell it, and it's going to keep going stair-stepping lower, and this monthly is going to go up and slingshot lower, and then it's going to go up and slingshot lower, and then it's going to go up and slingshot lower again. How else are we going to get down here but keep slingshotting? Right? Price never moves in an uptrend without slingshotting, and price never moves in a downtrend without slingshotting. So that's how we know it's going to go to this destination. What's another reason why? Everybody knows the inverse relationship between bonds and Fed rates. As the Fed raises rates, bond prices are going to go down on this chart. And would anyone tell me, is the Fed expected to raise rates again over the next 2-3 years? Yeah. So where's it going to go? That's why it's going to this destination. But notice the monthly's oversold again. So yeah, we're going to start buying a little up moves when it depressurizes again. So when this monthly comes down and hooks, I'll be the first to tell you, hey, buy 30 Treasury, because it's definitely going higher, but it's going to go up to slingshot lower, and this is the destination. But once the monthly hooks, that'll be a great entry to go back long for several weeks. Notice the weekly. The weekly's been slingshotting lower and lower and lower. Isn't that the behavior it does when a monthly moves from overbought to oversold? Right? Still doing it, and it's still slingshotting lower. So what else do we know? based on a monthly, I love it, based on a monthly hook and cross. Everybody see it? It's hooked, and that's crossed down again, even though it's oversold. Doesn't matter. That's why this program is so awesome. It's down, and this is crossed. So what does a hook and cross pattern mean on a weekly? It means the weekly is going to finish the down cycle. The weekly is going to finish the down cycle. So we have more downside, stair-stepping downside. Then I'm going to look to buy 30-year Treasury once it hooks. Because once it hooks, I'm going to get weeks of upside pressure so it can form the next slingshot, and then I can sell the next one. Right? So how do I trade this to the downside? The daily's oversold, so the daily's going to start slingshotting lower, but it needs to depressurize. So what about 30-year bonds? We're starting to see a daily hook. We don't have a cross yet, but this is why I'm calling your attention to it. If I come back Sunday, Monday, and the markets reopen and we see this extend higher and hook, and we see this cross over, then that tells me a daily hook and a cross up means this 4 hour is going to do what? Finish the up cycle. So even as it's engaging, disengaging, engaging, disengaging, it's going to do what? Continue to grind up, down, sideways to higher, so that my 4 hour can finish this up cycle. 4 hour can finish the up cycle. So what can we do with the trade? We can set the trade management system to say, okay, I don't want to worry with this engage, disengage scenario. I want to know when you're finished. I want you to go back in overbought territory, so when you hook, I want to sell you. Why would I want to sell the 4 hour slingshot back down, or when it reaches overbought and hooks down? Because the daily is expected to depressurize to slingshot lower in the coming days. Why? Because the weekly is going to finish this down cycle. So I know I'm interested in selling the next daily slingshot. And when is the most appropriate time to sell a daily slingshot? Is when the 4 hour gets all the way in overbought territory. Gets all the way in overbought territory. So let me slice this up for you. We call this the slice of heaven. This is how I created the slice of heaven. Notice how the 4 hour goes up to slingshot lower, goes up to slingshot lower, and several times. I won't highlight every one of these, but you'll see what the lower time frame does. It's about cycles. So it's not a difficult concept. You can see multiple times. I'll just select a few here, and I'll do this other big one over here. What do we know about cycling time frame? That in order for the 4 hour to depressurize, when it hooked here, the 1 hour was hooked and crossed, and it was going to go to overbought. Then when the 1 hour turned and went from overbought back to oversold, it forced the 4 hour to engage. Then the 1 hour goes from oversold back to overbought, overbought back to oversold, oversold to overbought, overbought to oversold, oversold to overbought, overbought to oversold. Everybody get it? So the lower time frame is the one that's cycling up that allows the 4 hour to depressurize, and it's the 1 hour going from overbought back to oversold that forces the 4 hour to engage back down. The same thing on a daily. When a daily forms, it's the 4 hour going from oversold to overbought, and then when the daily engages, it's the 4 hour going from overbought to oversold. So watch as I go to the 1 hour. You're going to see the trend momentum and the price action cycle back and forth. And I need to go back in time, so I'm going to turn the auto scroll off so we can see more of this. But you see the same picture. It goes from oversold to overbought, so that slingshot formed. Then it goes from overbought to oversold, so it engaged. Then it goes from oversold to overbought, so it formed. Then it goes back to oversold to engage, back to overbought to form, back to oversold to engage, back to overbought to form, back to oversold to engage. Everybody see it? And here's the daily, for example. Well, let's see the last time we got a nice, beautiful daily slingshot. Even on this little mini one that engaged and disengaged. Watch what the 4 hour does on a daily slingshot. Exactly what the 1 hour did inside of our 4 hours, it's going to do it on the daily. A weekly's the same way. What happens when a weekly starts to form a slingshot? And we can go to the weekly and show you that one. What happens when a weekly starts to form a slingshot? This is the daily going from oversold to overbought. And then it's the daily going from overbought back to oversold. And then it turns and goes back up, so it's the daily going from oversold back to overbought. And then it turns and goes back down, so it's the daily going back from overbought back to oversold, right? So I'll show it to you again. This is just different time frame, but it doesn't matter. It's always the same. So in the case of the daily, it went from oversold, overbought, so my weekly slingshot could form. And then the daily from overbought to oversold, so the weekly slingshot would engage. The daily going from oversold back to overbought, so the weekly could form. And then the daily going back from overbought back to oversold, so the weekly could engage. How cool is that? So now it's like, well, I tried this system years ago, and when it was starting to hook, I didn't know if it was perfect time to get in. I've heard different things, and I said, well, this is done, that it's a no-brainer. If you don't know how to trade it, let the machine do it for you. But all you got to do is set it, and when my daily starts getting overbought, I can tell the system set it, ready to trade, and then as soon as it hooks, it'll enter the short trade. Automatically for it. So guess what? I could set it to short this thing all of these days until it reached overbought, and it would never enter until it reached its destination and the criteria was entered and met. Boom. There you have it. So just think about slingshots as cycling time frames. Everything is about cycling time frame. This system is so smart. The daily is aware of where the trend momentum and the PAI are located on all time frames. The daily is aware of where the weekly and monthlies are located. All time frames look left and right or where they're surrounding. That's how they know when they're supposed to hook versus just staying flat or down versus to continue to go lower before hooking or hooking sooner than it finishes the cycle. It knows all that based on the cycles. All right. Another great trade that's setting up is also those of you that we mentioned coffee, but let me pull that up. I believe it's in this. Sugar's in the process of pulling back. We pegged this one. We pegged this going higher, 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 made a huge, huge profits. And then we said, look to go short because this is going to pull back. But overall, I'm looking very excitedly for a higher low, higher high as my weekly is up with a hook and a cross pattern. So this is why we entered this trade several days back. When my weekly first started to hook, we entered off the daily and we took this trade. As you can see, we took profits along the way as it went higher and higher. And this is in the process of pulling back, but the daily's turning back up. My weekly's still up, and my monthly is deeply, deeply, deeply oversold. So this is another one you need to keep battling. What do I mean by battling? Because it starts its bottom reversal. All I got to do is wait for the hook pattern to get in because it tells me the lower time frames are going to cycle. And if it hooks and crosses, you know the lower time frame is going to finish the up cycle like we had on the weekly, right? We not only got the hook, but we got the cross. So when it hooked and crossed, that told me weeks ago this daily would finish the up cycle. What did the daily do for us? Finish the up cycle. Finish the up cycle. So we were able to peg this as it's still ongoing. I expect to make a higher low and a higher high, but there you have it. And the daily's already turning back up. So that's why with the daily should slingshot higher. As long as my weekly stays up, this should engage and continue higher. And my 4 hour is in the process of what? Moving from oversold, moving toward overbought. Moving from oversold towards overbought. And why is the 4 hour expected to finish the up cycle? Because we have the daily hooking. And no, not yet do we have the cross, but this is why I want to come back when the markets reopen to see as this expands and gives a new daily, does this cross? And if the answer is yes, then that 4 hour is absolutely going to finish the up cycle. Okay? So, this is another one. As I'm mentioning, coffee's totally oversold across the board. And sugar monthly hadn't even started to turn up yet. So this should allow sugar to keep stair-stepping higher for months. And we're still allowing the hook and cross pattern. I trade intraday. Once the daily does hook and cross, then I know the 4 hour is going to finish the cycle. And then at the hook and cross pattern on a weekly, the daily is going to keep slingshotting and a hook and cross eventually on the monthly. Then we know this weekly is eventually going to finish this up cycle. So it's a little premature to say, I guarantee this weekly is going all the way to overbought and sugar is going way higher. But we're not far from being able to say that with extreme confidence. All we need is the hook and the cross. Hook, cross, Then that gives us weeks and 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 weeks of upside pressure. Okay? Russell. Depends what you want to trade. Same difference. We pegged this one. We told everybody go long in our last class Friday. Keep going long until the 4-hour turns and then sell it.
Last class Thursday.
Thursday's class. And what happened? Why did the 4-hour go to overbought? Because during the trade yesterday, we had the daily was up and the cross was beginning, so we knew the 4-hour would finish the cycle. Finish the cycle. Boom, there it was. And then, Harley, you were there, and I told him, as soon as the 4-hour turns and hooks, sell it. Doesn't mean it's going to make new lows. It might make a higher low and a higher high, but we knew to sell it because it would make several points. And check it out. Where did it start to reverse? Up here at 1731. And we came down to a low so far of 1715, so a good 15-plus point move. Anybody interested in a quick little 15, 20-point move? That was it. So what's next? Look at the alignment. We have a monthly that is overbought, but it's still up. Up. So what does that tell us about Russell? It's still got some more upside to come. And what about the weekly? The weekly is starting to depressurize, so that means we're expecting it to stair step a little bit in a correction, but ultimately we're expecting the weekly to slingshot higher and higher and higher and higher, right? So do we get a weekly hook and a cross, or just this to slingshot back up? Right now we're working, there's the hook. We don't have a cross yet. It's on top of each other. I'm waiting to see green below, so not yet. But if we see the Russell as we go into next week and this extends lower and this crosses lower, then I know this daily is absolutely going to turn and hook out and head lower. Well, I've been believing this was going to turn and hook out days ago as it even started to rally. I said, we still got an opportunity for this to turn and hook out. Why? Because the weekly has already started to hook, right? Here's the weekly. The weekly has already started to hook right there. So the daily trying to engage up against a weekly that's hooking down, the probability of us, in this case, the Russell making a new high is low, and the probability of the daily turning over so it can finish the down cycle becomes high. So let's add to that some more proof of ownership. What happens if I get my weekly to hook and cross going in the next week? What if we get this to hook, which it is, and this finally crosses and we have an official hook and a cross next week? Then without question, this daily is going to turn and hook out. It's going to finish the down cycle. The trend momentum is going to finish the down cycle, and Russell's going to head towards the cloud. So watch Sunday when the markets reopen, or join us, and then you could be in class with us when we peg this one for you. But the bias is this will turn and hook out and head lower. All I need is the weekly to confirm it when the new candle comes next week, and I see this hooked and that crossed. That tells me this daily is no question going to disengage. Why does it have to disengage as opposed to go all the way up? So it can finish the down cycle. So it can finish the down cycle. See how easy this is?
Okay.
How cool is that? All right. So let's go. And I'm going to cover a lot, and I can cover some more at the end, but let me show you some more trading results. This is an example of gold. And when we trade gold, yeah, we could do intraday scalping and stuff, but I like to set up the big time frame to get in and stay in for a while and make huge moves. This was a trade, $126 move higher on gold. Very, very lucrative trade. Here's another one with gold to the downside. Got the trigger to go short, entered the trade, and we started selling the rallies in a downtrend. Easy. Monthly, weekly, everything was aligned. This was a $150 move lower on gold. Very lucrative. This is an example of our student that uses TradeStation. He uses our software signals and places the corresponding trades in his TradeStation platform. He made 8,600 pips and counting. Well, he used our Slice of Heaven Finder, which I'm going to show you that in a moment, and it set up that monthly, weekly, and daily time frames for all these different trades. And he stayed in it, and that 8,600 turned to 18,300. Now ask yourself, I'm sure you would be beside yourself if you made 8,600 pips. But Tony, imagine if you closed the 8,600 and knew it went to 18,300. This is what the software will do for you. It allows you to continue to stay in those winning trades. And then here's the picture of that same TradeStation account. Now, if you add up all these trades, it tallies 18,311 pips. And it was all based on our hook and cross pattern using the cycle and time frames and our Slice of Heaven finder to find the trades in advance for you. Here's an example of a pound odd trade, up 778 pips. Well, that seems nice. Well, it's a nice trade. Well, why didn't we close this trade? Notice when we were selling the pound-based pairs, they were all setting up for massive down move. We sold numerous of them, 171,000 on multiple pound-based trades to the downside. Why? Everybody was setting up for the down move. Everybody, daily, weekly, month, everybody was in a downtrend, and we were selling. And why did we keep? And then we didn't even catch it at the time. We caught it after a pullback and then sold the hook. We sold the daily slingshot, and it made 700 pips. So we stayed in it, and it went on to not only 778, it stayed in it. It went to 1,274. Well, we weren't finished then. We kept in it. It went to 2,270. Still wasn't finished because the monthly and the weekly cycle had more to go. So we stayed in it, and it went all the way to 3,627 pips. This is what the system does. You watch the alignment and you allow the time frames to finish cycles. That tells me, should I stay in this for a long period? Strobe light, a long period or not. Just 1 second. Sorry about that. I went off my border edge and it did a little strobe light for you. See if you're awake. Okay. Okay. So, sorry about the delay. So, what do we know? We knew that this would continue to go lower, and we stayed in it so that it would finish its cycle. So we continued in this trade, and it moved on to 3,073 pips. The pound yen, 3,215 pips. This is what we call a breakout trade. And this is where we have the software set up, and this was during the London session for a currency pair, but it also works in stocks, futures, commodities. You can set it intraday trading. And this system's so smart that when I tell it the first hour of trading, I want you to tell me what the high and low is. And then once the high and low is automatically calculated at the end of that first hour, you can tell the system to either sell the downtrend or buy the uptrend. And in this case, I can tell it to either, hey, when it breaks the high, go long, breaks the low, go short. Or because we were in a downtrend at the moment, we simply said, don't worry about if it breaks to the high. We want you to only sell it once it breaks the low. That went on to 272 pips, just an instant little breakout. Now, what is our Master Trader program? It includes the Premium Edition 3 software, and it includes our live trading classes where we place all these trades. We tell you exactly when, where, how, why, what the software is expected to do. I show you through the process of showing the painting the PAI Picasso through the software.
And we have a lot of fun.
And we have tons of fun while we're doing it. So what's in the software? We have an MPA pe3 market scanner. We have the Slice of Heaven finder. These two combined used so you never miss the next big trade. We have the MPA slingshot trade triggers, which we showed you. We have the trade management system. We have a Platinum Asia scalping system. We have a Triple P scalping system. Again, all of these can be used in any market or any time frame. We have the MPA breakout trade system. We have the MPA bracket trade system. So you haven't seen nearly a fraction of what we have to offer inside our suite, but everything's tied in with the hook and cross pattern and also our methodology. Everything's built in.
And the nice thing about our software is we don't parcel it out. It's all included.
And yes,
when you have access, you have complete access.
When you have access, you have complete access. We don't parcel it out and say, okay, you sign up for this, but if you want that, you got to pay more, and you want this, you got to parcel it out. No, we give you everything up front. So this is what the scanner looks like. You can set it up to scan the markets. This is customizable, so if you don't trade Forex, you can put whatever stocks, silver, S&P, Netflix, whatever's in the market watch, you can customize to your preference. This is what the Slice of Heaven Finder says. You can customize this. You can get it to where the dailies are lining up. You can set it where the monthlies are lining up. You can set it where the 5 minutes lining up. Depends if you want to scalp, day trade, position trade, investment trade. You change the time frames, and then it scans every symbol within the market watch to show you what's setting up on the higher time frames. Again, 100% customizable. Now, what are the trade triggers? The trade triggers are triggers that fire when what? You get the hook and cross pattern set up, and you get the hook and cross pattern on the oversold setup. And they will fire as another visual aid if you so desire to have a trigger for you. Otherwise, it'll enter it even if the trigger's on the chart. That's how smart the software is. Here's an example of a footsie trade we've been in this past few weeks. And we sold the footsie trade, and we were up. You can see there, footsie 4,400 on that one position. And then sugar, we were up over 22 on that sugar trade I mentioned. There it is in the market watch there. All right. And then this is the trade management system we mentioned. You've seen it running. It's color coordinated so that whenever you're short, it shows red text here. When you're long, it'll show green text. Then it puts your stop loss, take profit levels on the chart that are customizable in the sense you can move it up or down wherever you want to place those. Type of trading. So if you want them closer or further apart for longer term trades, it's 100% customizable. And then it gives you a slingshot console. So on the horizon, you know what slingshots are in the format, if they're going to affect your trade or not. A little console, all viewing. And then lastly, it tells you the most pertinent information, how many lots you still got going, what's your profit, how much to the next profit level, and then where your stop loss located, etc. Now, 10 top reasons why you should try GPA Trading Services. It automatically, our system, software, pe3, it'll automatically calculate support and resistance levels. You don't have to guess, well, is this support or is this resistance? It does it automatically. It'll automatically identify the trend of each time frame. It automatically monitors and tracks time frame cycles, which is very important. It automatically provides consistent entries, exits, and take profit levels based on those trade triggers, slingshots, profit triggers, PAI hooks, etc., etc. You can set it in advance, like we were mentioning. If I want to set it in advance and have it ready to trade when that 4 hour finished its up cycle and hooks down and enter a trade for me, it can do it in advance, and then as soon as it meets that criteria, enter it for you. Or you can set it automatically to where, hey, I'm ready right now. This is ready to get in. Then I click and drag to trade, enter the trade immediately. And in either case, whether you set it in advance or you use it currently, it'll still manage the trade from start to finish, including take profits, etc., stop loss. And when you first hit your take profit one, it automatically moves your stop loss in the profit. You don't have to do a thing, but let it do it. It fits all trading styles, any and all. I don't care if you're a scalper and want to spend your whole life on a 1 minute time frame. Well, this is the 1 minute you need to be on, because once the 5 minute hooks, you know the 1 minute's going to finish the cycle for you. Dual scanners, scanning the market for the next big trade. It works on over 800 symbols, including stocks, Forex, futures, ETFs, commodities, etc., bonds, you name it. And then it consistently delivers low risk, high reward, high probability trades. What more could you ask for? Now, here's the special we're offering. We normally don't offer a monthly program. We normally have, if you go to the website, it's only annuals, etc. So when we do offer a monthly, in the past we've offered it for a special price of $3.99 a month, which includes the software, all components, and all of our live classes. Well, we're willing to do a better deal today. We're going to give you a today's special for $2.97 a month, full access, everything and then some, and there's so many things in there we hadn't even talked about that's also included, plus the classes. And there is the link in which to sign up. I'll go ahead and paste that for you, but it's www.gpatrading.com/a member/sign up/monthly $297. So it's www.gpatrading.com/amember/sign up/monthly 297, and it should be posted in the link for your convenience
In the chat box.
in the chat box. All right, so continue. I want to thank you for attending today's webinar. If you have any questions, please send an email to support@gpatrading.com. And we'd like to thank you for attending. And remember, the market price anticipator software is unlike anything you've ever seen. Even if you think you've seen it before, you haven't. Market price anticipator software empowers you to read and anticipate price in any financial market. On time, in time, all the time. On time, in time, all the time. And last but not least, we're most proud of all is that we have been educating the world for many years, and we have over 123 countries and counting. So if you're
represented by the flags on the world map.
As represented by the flags on the world map. So if your country flag is not on our world map, we recommend you to join us. And we'd like to see your flag appear on our world map. So back to the charts. Let's make it interesting. Okay. Amazon. Amazon's going lower. Those of you that trade the big AM, we already engaged, disengaged, engaged, disengaged, clearly going lower. So the probability that we reach this previous low and make a new low is very high, and that Amazon keeps stair-stepping lower towards this cloud is a high probability. Why do we expect this is going to keep, even if it engages, disengages to finish the down cycle on Amazon? Simply stated, we have a hook and cross pattern on the weekly. So it works on stocks, it works on anything you want to trade. So with the hook and the cross, we know this is going to stair step lower, and we know based on the hook and cross weekly, the daily is absolutely going to finish the down cycle, and that when it tried to engage up, remember I was showing you this earlier, when it tried to engage up, as soon as it turned and hooked out, it's a high probability it's going to go back to the previous low and make a new low. So then it engaged up again here and disengaged. So it engaged up from this low. So what's the probability it's going to go back to this low and make a new low? Very high probability. Everybody see it? And again, why do we know the daily can engage, disengage, but still finish the cycle? Finish the cycle because the weekly has a hook and a cross pattern. That's simple.
When can we see it in action? It is in action.
This
right?
is in action.
This is all live right now.
This is live, ticking right here. It's 2:30. It's still ticking.
This is live as it gets.
Right. This is live and in action. Here's the daily. It's still going to go lower, finishing the cycle. And then the 4 hour is going to continue to slingshot lower and lower. See, it's on cue. 4 hour has to slingshot lower and lower so the daily can finish its down cycle. So traders out there, when you want to scale in or scalp in, you see the 4 hours engaging slingshot right there. It's telling me right there it's bolded. And we have the 4 hour engaging over right there. See it? How cool this is? So yes, this is going to continue to stair step lower so that the daily can finish its down cycle. And the reason the daily is going to finish the down cycle is because we have the hook and cross pattern on the weekly. BABA. We pegged BABA. We have a hook and cross pattern on BABA to the downside. So what does a hook and cross pattern on a monthly mean for BABA? It means the weekly was going to finish the down cycle. So I've been trading this to the downside the whole time because I knew the weekly would finish the down cycle. See how easy it is? Whether it's stocks, futures, commodities.
I wanted to look at oil too.
Okay, black gold Texas tea, the Beverly Hillbillies. Before we do, let's look at, we did Amazon. Amgen. Amgen's one of my favorite companies. We're just starting with the 4 hour hook. As the markets reopen next week, and I see this 4 hour go hook, cross, that's telling me the 1 hour is going to go all the way to oversold. So we're going to get hours of downside pressure, bounce up, down, sideways to lower for Amgen. And why is the 1 hour going to finish the cycle? Because the 4 hour is going to give us a hook and a cross pattern, which I suspect when the markets open, it will next week. And why downside? The daily's overbought, so it's more likely to start turning over as well. The weekly's overbought, and the monthly is overbought. It's still up nonetheless, but it's still up. So we expect that Amgen is due for a pullback, and I'm not saying it's going to grind to dust. No, it's going to go down, finish the cycle, and then it's going to cycle back up. So I expect this will climb higher in the future, but it's in a down cycle right now. My daily has made it back to overbought. And if we look into this next week and we see not only is the daily hooked, but the daily hooks and crosses like it did the previous days ago. See it when it hooked and crossed? What does that mean? Price is going to go to the oversold territory on the 4-hour, and the 4-hour went from overbought to oversold. And when the daily hooked, it did what? Hooked and crossed. It went from overbought to oversold, overbought to oversold, and you can scalp that down. Then why did it reverse back up? The monthly was still up. The weekly was still engaging up. That's why it was stair-stepping higher. But you can sell during the times when you get the hook and cross, because what? This 4-hour, and again, it doesn't matter which one you're looking at. Here's the 4-hour. We got a hook and a cross. So what about the hook and cross on a 4-hour? It means the 1-hour is going to cycle all the way to oversold. All the way to oversold. See how that works out? Every time. It's like clockwork. And they wanted to look at gold. Black gold it was?
Yes.
Okay, here's oil. Let me pull that up for you. And I'll do gold while I'm already here. Gold's in a process of a daily engage, disengage. It hadn't officially hooked out yet. Part of it has, but we're very close to get a little more up, down, sideways to a little higher on gold. But I don't think gold's ready to break out just yet because the monthly is still down. So I'm keeping a keen eye on the monthly hook and cross pattern. But what the monthly hook and cross pattern did for us on gold, this is why I continue to show you gold trade. $125, $150, $110. We do big moves on gold because we align the big time frames, and when it hooks and crosses, as the monthly did months ago, what did the weekly do? The weekly went from overbought all the way to oversold. Overbought all the way to oversold. And every time the monthly hooks and crosses, the weekly goes to oversold. The weekly hook goes to oversold. That is when the monthly hooks down, that is. When the monthly hooks up, or in the weekly hooks up, the daily makes the cycle. When the weekly hooked up here, we knew the daily would go to overbought, right? Let me move all these lines out of your way so you can see that. And think about it in terms like this that you may not have ever thought of. This is like a fuel gauge. How do I know when I go to my automobile that I have gas in the car? Well, you look at the gauge and it tells you half a tank, 3/4, etc. Well, how do I know how much fuel is left in the tank for my trade? When you hook and cross on a weekly, your fuel is going to be your daily time frame cycling all the way to overbought. So when we started to see the weekly hook here, what did the initial hook mean? The daily had already hooked and crossed. Remember the rule. When it first hooks, it would not hook until the daily crossed, hooked and crossed. Well, once we got the hook and the cross, again, it wasn't the steepest of slope and the biggest angle in separation, but it still was a hook and cross pattern up. See it? Up, up, green above the red. So what did it mean from that point? Why did I tell our class to buy gold and look for it to rally and start moving higher and expect the daily would finish its down cycle, and there's several days in the daily cycle, but this is the swing point low off of that weekly right there. That's the same swing point low, same hook, same area, so you're seeing the exact same thing. But the daily, as it hooked, when this officially hooked, the daily was already hooked and crossed. So this is a great entry to go long, and we even gave you targets along the way exactly what to shoot for, because we use our Fibonacci sweet spot from the swing point high to swing point lows, and a weekly swing point high to swing point low, and a monthly swing point high, swing point low when necessary. But it meant the daily would go from oversold towards overbought. The daily would go from oversold towards overbought. So where are we now? Well, we have a monthly that's down, we have a weekly that's bottoming, and we have a daily that's in between right now. A lot of sideways movement. See how accurate the software is? It goes up, it goes down, price goes down, it goes back up, price goes up, it goes back down, it goes back up. It follows. So how does it work? It's a leading indicator. Why else is it leading? Because when it hooks and crosses, it's telling you days, weeks, months in advance that a cycle will play out. How cool is that? So all it's got to do is hook. That's all it's got to do. All you got to see is right here, the red, blue, and green hook. All it's got to do is hook. That's completed. So I promise you, every time this hooks on a daily, all you got to do is go to the 4-hour, and you're going to see, when I turn auto scroll off, you'll see the 4-hour has already hooked and crossed as the daily continues to move higher. And this is the swing point low right there on the daily, the weekly, etc. Same swing point low. And by the time we got the daily to hook, the 4-hour was what? Already hooked, already crossed. I moved the line because it was on this candle where it hooked and crossed, but I moved it over so you could see the swing point low. So when that daily, Gene, gave us the simple little hook, just a little bitty hook right there, that meant this what? Daily hook means the 4-hour is going to go, has already hooked and crossed, but it's going to move from oversold to overbought. Oversold to overbought, and scalp away you go.
Okay.
And then it went right to our Fibonacci retracement zone.
Okay, a couple of requests. Emil asked for oils. Let's do that. And then Carol wants to do the odd yen.
Okay. All right.
Do the oil, please.
Black Gold Texas Tea, the Beverly Hillbillies. This is my little Elliott wave count. We're either in the process of topping and rolling over, or this 4 is not quite finished yet. But it doesn't matter if you believe it's over or you don't. We simply trade the cycles of the software, and I don't worry about Elliott wave and the wave counts. I give that information to you. But in case you say, well, I need to know Elliott wave to use the software, you don't need to know anything to use the software. All you got to do is treat it like a video game and see when it hooks, you know to go long. When it hooks down, you go short. And based on the time frame of your comfort level being in the markets, I like the weekly, monthly, and dailies because I stay in trades and I tally up huge, huge trades. So where are we with black gold? Black gold has worked its way back on the daily, and this is what I mentioned in class. We were likely to see a new high and likely to go to this previous swing point before it reversed, so the daily could finish the up cycle. Well, it's not quite finished yet, but we'll get signs of that going into next week. By what? The 4-hour continuing to slingshot is how the daily keeps moving. So the 4-hour has turned over and is starting to go down. So when the markets reopen next week, I know they're still open now, but they got just a little bit of time. But as the markets reopen next week, if this 4-hour extends lower and this crosses lower, even though it's a hook from here and a cross back down from here, the original hook and cross was up there, right? Everybody see it? That was the original hook, the original cross. So even then, what did black gold do for us? What did black gold do for us intraday when you get a 4-hour to hook and you want to sell that? Remember, this PAI will hook first before the trend momentum crosses. That's by design. What is the hook, then the cross? Trend follow through, trend continuation. And when I get the hook and the cross on the 4-hour, what does that mean the 1-hour is going to do? It's going to go from overbought to oversold. See, it does it every time, over and over and over and over. So why do we think black gold still is potentially reversing but might still have some upside? Well, it's still, because the weekly is still up, it hadn't hooked out yet. See it? Still hadn't hooked out yet. Now I'll move this red line so you can see the end. It's still up, and the trend momentum is slightly up. See it right there? We got a up, up. So the likelihood is why I told everyone in class yesterday and going into today, watch for gold to keep stair-stepping, in this case black gold, to keep stair-stepping higher, because the daily is projected, it's anticipated to finish the up cycle. Up cycle. So when's a good time to sell gold? Black gold, that is. When's a good time? When the daily hooks. When the daily hooks. When the daily hooks. So what is it going to mean? And I'll take it for example. Let's just say the next couple of days we go in the next market, Sunday, Monday, and we see this hook. And we'll just say this is Sunday, Monday, and it's hooked. Right? Simple little hook right there. That's all you need, Gene. A little hook. Emil, what does that little hook mean for us? All I see is that little bitty hook starting. I don't have to let it hook and go way down to be obvious. Like, well, I saw it hooked here, but I didn't wait until it was way down here to show me for sure it was hooked. No. As soon as it just hooks, you know it's hooked because it would not hook unless what? My lower time frame, which in this case would be the 4-hour, had already hooked and crossed. Hooked and crossed. And again, it's the swing points on this because you get multiple trades in the same scenario. But that same swing point high when the daily hooked, swing point high the daily hooked from, is what? The 4-hour is already hooked and crossed. And price is going to do what? Go all the way to oversold. Go all the way to oversold. Go all the way to oversold. So what is this interest in this next week? When the markets reopen and this hooks down and this crosses down. Price is going to go back down toward the low and make a new low if we see this hook and cross. And why should that be the case? Because this 1 hour would finish the down cycle. Finish the down cycle. And when it finishes the down cycle, we're likely to see it back at the low and make a new low. See how easy it is? So weekly's still up, but it's trying to engage up against a monthly that is hooking over. So the probability that we go on and make a new high right now with gold, black gold, is pretty low. I'll move all these out of your way so you can see it. But that's what we use. A hook and cross pattern equals, the hook and cross equals the lower time frame cycle. A hook and cross pattern also equals the highest probability for a Fibonacci retracement into the sweet spot. It's a twofer. So why do we believe we're not going to go breaking new highs now? Because the monthly is still hooked. And especially as we move into the next week or so, we get October 1st, if this extends lower and this crosses lower, if we what now? If this is down next month, which is about what, week and a half, 21 days, today's the 21st, so less than 10 days when we get the next monthly candle, hook, cross, then I'm going to be short black gold for months because that would mean this weekly is going to turn and go all the way to oversold, and it's going to turn and go all the way to oversold for weeks and weeks and weeks and weeks and weeks and weeks. That's how easy it is. So what about intraday when I want to scalp? Well, right now, because the weekly is still up, we know it's going to eventually turn. Even if it goes all the way to overbought, it's still going to reverse and go back to oversold. So while it's up, this is why I told everyone to scalp this to the upside, because the weekly turned and it's up and the trend momentum slightly crossed. So that I said, stay in it long until the daily finishes the up cycle, then sell it. So when's the next time to sell black gold? When the daily hooks. And when the daily hooks, what does that mean? I'm going to be in it for at least probably a few days. But I'm going to be in it at least until once I get the daily hook and cross. I'm going to be in it until what? The 4-hour finishes the down cycle. Finishes the down cycle. See how easy that is?
And Carol wanted to look at the odd yen.
Odd yen. And Carol, this is another one since you're talking odd yen. I want to call your attention to the New Zealand yen before I do. This trade is, we placed this in class. Why do you want to be in the New Zealand yen? And yes, I'll show you the odd yen in just a moment. I'll remove all these lines out of our way. We have a weekly hook and we have a weekly cross. See it? Hook, green above the red. The steeper the slope and the more angle and separation, the stronger the trend. We're not there yet, but what about next week? We're going to get a new weekly candle, right? When the markets open on Sunday and Forex opens again, we're going to get a new weekly candle somewhere in here, and then this is going to extend higher because we're up for the week. And this is going to cross and start to show some angle and separation like that because it's going to extend higher as well. So watch, I'm telling you exactly what this software is going to look like before it's even done it. How cool is that? See these lines? This is going to extend higher. Red's going to extend. Blue's going to extend, green's going to extend higher. And you see the green that crossed above the red, there's no separation. What do you mean by separation? When the red, and in this case the green, separates from the red, and you see gray between. All we see is a little bit of green above the red, but they don't see any separation. So when Sunday market opens, you're going to see the new candle form, and you're going to see this extend higher, and you're going to see this extend higher, and you're likely to see the gray between the green and the red. So we're clearly going to have a hook with steep slope, cross with angle and separation on Sunday. So what is this hook and cross already telling us? That my daily is going to finish the upcycle. That's why we got in it days ago. And in this, I scalped in based on a slingshot back up. That's why my stop loss is there, because we just scaled in and we're only up to 94 pips now, not the 100, 200 plus that was down here. This was in class, and someone said, well, if we know this is going to go higher, how do you scale into that? Well, remember, a hook and cross on a weekly means this daily must finish the cycle, right? Everybody's clear. Isn't that easy to remember? A weekly hooks, it would not hook unless the daily had already hooked and crossed. And then once the weekly hooks and crosses, the daily will finish the upcycle. Pretty simple to remember. Well, while the daily is finishing the upcycle day after day after day, finishing the upcycle, how do I scale into that position? You buy the 4-hour slingshot, because the 4 hour is going to go to overbought because the daily hooked and crossed, and once it gets there, it turns over, you buy the slingshot, turns over, you buy the slingshot, turns over, you buy the slingshot, or otherwise known as buy the dip in the uptrend. Well, when's the best time to buy a 4-hour slingshot, which I was illustrating earlier? When the 4 hour starts to form, it'll hook and cross and start forming a slingshot. This is what I mean by forming, then engaging. Forming, then engaging. Well, notice what the 1 hour does. The 4 hour starts forming this slingshot because the 1 hour goes from overbought to oversold. Then when the 1 hour bottoms and reverses and goes from oversold back to overbought, that's what forces it to engage up. So now I'm going to place the line right dead center between, whoops, I moved my position deal, right here, where the 4 hour started forming, then engaging. And I entered it further off here. I entered off of this slingshot there, not this one. You can see where we are now and why we're up 93 pips. But this is going to do the same. It's going to slingshot higher. Why? Because the daily is going to finish that upcycle. So I know this is going to slingshot higher like it did before. But watch the 1 hour, how it's all about cycling time frames. And the software is so smart, it knows when the 1 hour is ready to turn. Otherwise, this would not. Why did it go 4, 8, 12, 16? See the candles? 4, 8, 12, 16, almost 20 hours before all of a sudden it goes, well, I've been going down for about 16, almost 20 hours. I'm going to turn because I feel like it. No, because the 1 hour cycled down and then the 1 hour starts cycling up. Watch the 1 hour right here. Boom. The 1 hour went oversold and it reversed and it hooked and crossed. That's why the 4 hour engaged up. And notice we did a little slingshot there. 4 hour went down, went back up, same thing. So the 4 hour slingshot, slingshot, slingshot. So what does the 1 hour do? Overbought to oversold to form the slingshot, oversold to overbought to make it engage. Overbought toward oversold to form, slingshot back up, form, slingshot back up. And this works on all time frames. So why did the 1 hour slingshot higher? You can slice and dice and do this through every time frame. Well, my 30-minute was going from overbought toward oversold, and then it decided to go from oversold back to overbought. That's why it engaged up. Watch the 30-minute. The 30 went from overbought to oversold, oversold to overbought, and it did what? It reversed and went back to overbought, reversed and went back to overbought. So when I tell you in class, hey, ladies and gentlemen, your trade alert is to buy the next 30-minute slingshot or 1 hour slingshot or daily slingshot. When do you buy it? When the lower time frame cycles to oversold for a slingshot higher, and you see that time frame you're interested in buying starts to depressurize, then when it starts to what? The lower time frame hooks, you get in. And that means that slingshot will engage. Bingo. Each time. So whether you're doing it on the bigger one or smaller one, it's the same principle. And it works on all time frames. All time frames. That's the beauty. It cycles. And I'll leave y'all with this. This software will never, ever, ever become obsolete. because it's based on cycling time frames, and time frames will always cycle. So therefore, there's not a market condition that's ever occurred or will ever be developed and occur in the future that the software cannot navigate you through. And those of you that have known me in our membership, we've had members since day one. If it didn't work and I wasn't leading them down the right path, they wouldn't be with us 5, 6, 7, 8 years and counting since our new GPA trading services. They've been in since day one because it works. It works. All right. So this is why, Carol, I'm finishing up. The monthly's oversold and it's due to start turning. The weekly is already oversold. It's due to depressurize. And the daily was oversold not long ago. That's why this was a great trade to get in, and why the daily is still going to finish the cycle so we could buy the next 4-hour slingshot so it can finish the cycle for a good scale in. And then the daily is expected to very likely turn over once it gets overbought and start slingshotting higher and higher, depending on if we get the hook, cross, like I said, with slope, angle separation. Then the likelihood the daily is going to end up doing this, keep going higher, turn over, and start slingshotting up, up, and up. Well, why is it likely to do that? Because watch on Sunday when this opens. This is going to be up with a steep slope. This is going to start to show some angle and separation. And what happens when you get steep slope and angle and separation? We can see the last time our weekly did that, right? On this example, steep slope, angle separation like we're expecting here. Steep slope, angle separation again. What does the daily do inside of that hook and cross pattern? And between the time frame it finishes cycling up, what does it do? Let me grab that real quick. Come on, let me grab you. There we go. So what does it do between that cycle? What is the behavior? The daily is going to do what because of the hook and cross pattern? The daily is going to go from oversold all the way to overbought. See it? Oversold, overbought. And then it's likely, depending on the steep slope, angle, and separation, it's likely to turn over and slingshot higher, turn over and slingshot higher, as it kept stair-stepping even higher before then the weekly turned and we got the big down move. So that's why this is a great trade to be in and one to keep scaling in, because the daily will finish the up cycle. I'm going to turn my auto scroll back on. It's going to finish the up cycle, and because by next week you're going to see the hook, cross, slope, angle separation on the weekly. Why that? Because the weekly is up 180 pips for the week. That means this is going to extend higher and this is going to extend higher. And if I see steep slope with angle and separation, like I believe I will, then I know the daily is not only going to finish the up cycle, but it's likely when it turns over to then turn over to slingshot higher and higher. Also, with the weekly hook and cross pattern, notice the monthly's turning up. Red, blue, green's turning up. It's turning up. So imagine as we go through the weekly going higher through next week, and then the week after is what? October 1st. So we're going to get a new monthly here, right? We're going to get a new monthly there. So what does that mean? That means once we get a new monthly candle and we keep going up for the month, which is likely because the daily is going to finish the cycle, etc., that this will end up in the next 10 days, or when the October 1st comes, new monthly candle, this will extend higher and this will cross. So if I come back October 1st and I see, hey, I'm in this trade, I'm making some pips, and now I see the monthly up and the cross, then that's telling me this weekly is going to continue higher for weeks and weeks and weeks and weeks and weeks and weeks and weeks. And the trend momentum, weeks and weeks and weeks and weeks and weeks and weeks. Everybody get it? This is why you want to buy the dips in the uptrend on the New Zealand dollar. Plus, when you buy the New Zealand at a positive interest rate, selling the new yen at a negative interest rate, you get a little bonus. Not only you make pips because of the movement in price, but you make additional income we call carry trade, where you have a positive interest rate that accumulates in your account while you're long. So it's a double fold bonus. All right, odd yen. Odd CAD. I'll change the odd CAD. We're in that one as well. Odd CAD, hint, hint, hint. We got a weekly beginning to hook there, Gene. So what does that little weekly hook mean? The daily had already hooked and crossed, and we're about to get the crossover. So this is another one. I know you asked odd yen, but it's coming. Odd CAD, we have the hook. All we need is the cross to confirm the daily is going to finish the cycle. And if it opens up steep slope with angle and separation, then the daily is likely to keep slingshotting. Well, why else is this a good trade? Look at the monthly. The monthly is deeply oversold. No, it hadn't hooked yet. But imagine as we go October 1st and we start rallying more on the odd CAD, we get a hook and a cross, then the weekly is going to finish the upcycle for weeks and weeks and weeks. But because we have the hook and starting next week, the daily is likely to finish the upcycle. So I'm expecting days and days of upside pressure, especially with the new weekly candle as it extends higher and we extend higher, and this will extend for several more days. See it? All right. Now I'm going to change, let's see, I'll do it on this one. This is, well, no, one other one before I let you go, and then I'm going to do the odd yen, I promise. See, I never stop. So when we're in class, the class is scheduled for 2 hours, but I routinely, as my students can tell you, we routinely do way over 2 hours, especially when it's the end of 2 hours and plus, and somebody says, can you look at this? Can you look at this? I ended up doing a boot camp for 6 hours, non-stop. All right, up 183 pips on the Euro New Zealand. You want to be on the short side of the Euro New Zealand. How do you know you're short? Text is red. What did this do? This was an entry off a hook and a cross pattern. How cool is that? Well, we got a weekly hook. We don't even have the cross yet. But because we're down so far for the week, we're likely to see what beginning next week? Extend lower, cross lower. So if I do get my hook and cross down starting early next week, right? Sunday open, or even on Monday, whenever we get the hook and the cross, that tells me we're going to continue to go lower and the daily is going to finish the down cycle. Look at it. It's got days and days and days and days and days still to go. How cool is that? So the likelihood, once we break below the purple line on Ichimoku, and I still see the daily hook and cross, steep slope angle separation down, then the next area we're headed is to the cloud, which is way down here at 173. So you got another 200 pips coming. Probably we'll reach that into next week, surely. We'll get down here by end of next week. And this pair can move 200 pips in a day easy. So we could end up sooner than the end of next week, but the daily is going to cycle down. And why is this a great trade? Look at the monthly. The monthly has been overbought, flattening out. And yes, it hadn't hooked yet. I don't care, because the weekly still got to go more and the daily still got to finish the down cycle. So even if it slingshots higher later, we're still going to make hundreds more pips before we can then buy and go long. But imagine come the first of the month in October and this is hooked, or even better, hooked and crossed. Then that means we're going to get what? Weeks and 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 weeks. Now, no, I'm not saying we're definitely going to get the weeks now because the monthly hadn't hooked and crossed, but you get the point. It's deeply overbought, so it's likely to start hooking and very likely to hook and cross, which means this weekly will cycle all the way down. That's why we're short and we're staying short. How cool is that? Now, let me switch to the, I'll just use the pound dollar. How you do odd yen, you just, everybody know. If you don't, you find odd yen currency pair and you simply click and drag it to the chart. That's simple to update. All right, now I'm going to close that so you see the big picture. Odd yen, I can already tell you, is in the same boat. Daily hook and across. This was a great entry because we had the hook early, which meant the 4 hour had hooked and crossed. We then got the hook and cross, which meant the 4 hour would go through the cycle, and then the 4 hour finished the cycle, turned over and slingshotted higher. Why? Because that's the only way the daily finishes an upcycle. The 4 hour has to go to overbought, slingshot higher and higher. The only way a daily can finish the upcycle. Why is the daily finishing the upcycle? Because we have a hook and a cross pattern on the odd yen. Everybody see it? We've got a steep slope and we got green above the red. We don't have angle and separation yet, but guess what? We're up for the week. So this is going to extend higher and this is going to cross higher, and we're likely to see the open of angle and separation. So what does this tell me? Weekly hook and across means this daily is going to finish the up cycle, and based on the steep slope and angle of separation, it's likely not only to finish the up cycle for another few days, but once it turns over, watch the cursor, it turns over to slingshot higher, is a bias. Yeah, and then look at the monthly. The monthly is also turning back up, just like the pound yen as well. So we got this hooking. Imagine October 1st when this extends higher because we're up for the month, and we're likely to go more before the month is over next week. So this should extend higher, and this is likely even cross. And what happens when you get a hook and a cross, right? Saw it happen before. So I'll draw a line here for you for your viewing pleasure. What happens after you get the hook and the cross? A weekly does what? A weekly moves from oversold to overbought. And then when it got there, it slingshotted higher and higher several times as it grinded because the monthly kept going. So yes, this is a great trade to get in. So if I was the weekly, and we were seeing this early on, and I first saw this weekly start hooking, I would have put my stop loss below the swing point low. That's easy. No guesswork. Simple as that. Well, now that we've moved from the swing point low down at 78.60, and we're up 400 plus pips, do I need to put my stop loss here to get in? No, not now. You just need the cycle to finish, and we know the daily is about to turn over, so I would look to get in this scale trade for a short-term trade by the 4-hour slingshot. What the problem with buying the 4-hour slingshot is, it's probably not going to make price go too much higher, meaning you're going to definitely make pips, but it's not going to go up 5, 6, 7, 800 pips on that 4-hour slingshot. Why? The 4-hour keeps slingshotting higher and higher and higher, right? Remember what we said, how a daily makes the cycle? The 4-hour has to move from overbought, in this case oversold to overbought. Then it must slingshot higher and higher and higher and higher. Well, why is this one? You should take aggressive profits like an intraday type of 4-hour, maybe a day, that this slingshots up, I can get in and make profit. But the reason you want to stay in it forever, because eventually the daily is going to turn and want to slingshot back up. So what's price going to do in the daily turn? It's going to come back against you. Then it's going to slingshot higher. So for a scalping trade, you can buy the next 4-hour slingshot. What did we learn about slingshots? That an ideal time to buy the 4-hour slingshot is when this turns and hooks. But what is the catalyst behind it? It's the 1-hour finishing the down cycle. Well, did the 4-hour hook and cross? Yes. Hook, cross, steep slope, little angle and separation. I can see gray between the red and the green right there. So that's telling me this is not going to go breaking new highs now, because the 1-hour has to finish the upside down cycle. So what is this going to do? It's going to engage. See my cursor? And as we go into Sunday/Monday, price is going to go up a little bit, and it's going to fizzle and start coming back down. This is going to turn and hook out, finish the down cycle. The trend momentums are going to finish the down cycle. And after this turns and comes down and this finishes the cycle, on Sunday, maybe Monday, when this has finished the cycle, I'm going to buy it when the 1-hour hooks. Buy it when the 1-hour hooks back up. Why? Because it's the 1-hour as it reverses back to overbought. It's the trend momentum when it reverses back to overbought. That's going to force this 4-hour to engage up. See it? So when you think of slingshots, all you think about is my 1-hour going from overbought to oversold, and then from oversold back to overbought, forcing it to engage. And why should this engage up? Why can we anticipate that in advance? Because the daily is going to finish this up cycle when it's not quite finished. And why do we know the daily is going to finish the up cycle? Because the weekly has given us a hook and a cross. And again, when the new weekly candle comes out, you're going to get this to extend higher, and this is going to cross, and we're going to have steep slope with angle and separation going in the next week, which means the daily is definitely likely not only to do that, but turn over and start slingshotting after that. So buy the dips in the uptrend. 1-hour, when it finishes the down cycle, buy the hook to scalp it. Then when the daily turns over in the next few days, as we go into next week, and the daily turns over to form a slingshot back up, we're going to buy it. So remember what I just said about the 4-hour. When would I have a daily coming down and forming a slingshot up? When would I buy the daily slingshot? Right? When the 4-hour finishes the cycle and it bottoms and reverses is when I buy the daily slingshot. So I'm already telling you it's going to slingshot higher in the coming days, and I'm telling you how to buy it long before we even there. When the 4-hour finishes the down cycle and it hooks is when you're going to buy that daily slingshot days from now, as this will turn over and slingshot higher later. And why is it supposed to do that? Again, because the weekly has a steep slope and you don't see a huge angle of separation yet, but next week you'll start seeing it. And the steeper the slope and the more angle of separation, just like with moving averages, when a 50 crosses above 100 or 25 above the 50, etc., it's the steeper the slope and the more angle of separation of the cross, the stronger the trend. Same thing with the trend momentum and the PAI. Steeper the slope, the more angle of separation, the stronger the trend. Hook means you get in. Hook and cross means trend continuation, follow through. And with that, I'll say good day, good luck, God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. For those of you that joined us already, and for those that you haven't, you have nothing to lose and everything to gain. Because I promise you, a week in my classes, I'm going to teach you an awful lot about cycles, time frames, scalping, trading, everything you need to know. So whether you stay with us or not, you'll have learned something far beyond the $297 charge. You'll make that in the first 10, 15 minutes in the class. Literally. All right? You'll definitely gain it 100-fold in knowledge.
Right.
And again, this has been retweaked, redone, totally different software, because now it would never hook. Right? Let me show you one more thing, because I never can stop and my passion is 24/7. Because this, when it was flat, it would have never hooked. It would have never hooked. It would have never hooked until the daily had already hooked and crossed. So you see the swing point low down here? It would have never hooked on the weekly unless the daily had hooked and crossed. So watch the weekly. The weekly started to hook and cross, and by the time the cross came, well, that's just the hook where it hooked, right? It's hooking up. The daily had hooked and crossed. See it? Hooked, crossed, hooked, crossed. And the link again is all right, let me type it in there for you. www.gpatrading.com/amember/sign up/monthly 297, and there's the link for you. And we've already had numerous people, so all of the people signing up today, thank you. We'll see you on Tuesday.
If you can't join us live.
If you can't join us, well, let me do this real quick before we go. Let me open up something real fast, and I'll show it to you for those of you that have joined. You simply go to GPA Trading Services, and we want you to use Internet Explorer to view our videos. You go into the members area, you log in, once logged in to the back side after your subscription is paid, you'll have access to the class schedule. You simply go to class schedule, and it'll line up this week's classes, the 18th, 19th, and 20th. I'll update the schedule for next Tuesday, Wednesday, Thursday. You just come in here, click the link, and you're in the class. And if you're unable to attend, don't worry, because the way I trade and the way I talk about all the time frame, we tell you this trade's probably a day away, a week away, a month away, or this trade is already in, but we're going to be in it and cycling through. And then you simply go here to watch the replays of the recordings. And this is a gold mine, a mandatory viewing of the hook and cross strategy. You think you got an understanding of hook and cross strategy now. Once your membership is active, you'll have access to this whole class. Was designated just hook and cross, and we went through the whole process, exactly what it is, what it means, why it means it, and what do you do, why you do it, when you do it, how you do it. Then we applied it to trades, like I just reviewed for you today. That's simple. And you just click and join, and look, you click the link, and then it opens up, and starts playing. Takes a second to pull up for the video to load, and then it starts playing, and you'll see it start playing in just 1 second. Boom. And it's completely customizable. You can maximize the video so you can see it. Then you can fast forward, and it takes a minute to buffer depending on how fast you forward, but it'll fast forward for you. It'll do everything you want it to do. Fast forward, rewind, play, you name it.
So no excuses if you can't attend live.
Right.
You follow along because everything's right there for you.
And you can see here's the trade we're in, Euro New Zealand. I'm explaining Euro New Zealand trade, why we're in it. We took profits, we're talking about it, and tells you about the hook, all that at your viewing pleasure. All right. So y'all have a great weekend. We'll see you next week. For those of you that think you need more convincing to join us, then why wait? Because you're just going to miss out on more trades and more opportunity for you. And we'll go back to the link so everyone can see it. Again, www.gpatrading.com/amember/sign up/monthly297. Take care. God bless you. And we'll see those that joined us next week.